As far as trading is concerned, there are two major decisions which will either put you either in a profit or in a loss. A decision to either buy or the decision to sell. And these two decisions happen in a two scenario. First, it is either a decision to make a reversal trade, and this reversal trade could either be to buy or to sell, or the decision to make a continuation entry, which is in a case where you have a pullback. My name is Soji and you are welcome to Soji Forex. To all our new subscribers, thank you for subscribing to the channel, and to all our returning subscribers, thank you for believing in what we do. We love you and we celebrate you. In this video, I want to share with you two powerful fearless strategies that you can build your trading system on. This actually is prompted by a question someone in the group asked, a follower asked, about how to make entry taking advantage of the Bollinger Band. And I'm going to put this video into two parts. This part I'm going to talk about pullback, while the subsequent video I'm going to talk about reversal. Now, first of all, the goal of our Bollinger Band is for us to determine our entry. And again, for those coming across this video for the first time, here is the setting. For Bollinger Band, the period is 130. These are the settings. Take a screenshot of it and set it up on your chart. Here is the moving average, the first moving average. Here is the second moving average. And after that, we have our relative strength index. And here, the pixel color we choose white because the background of my chart is white. If yours is black, kindly change the color to black. And after that, we have our commodity channel index. So if you have done all of this successfully, your chart will be looking exactly like mine. Now, having established that, what do? We use our middle Bollinger Band to determine the trend of the market. This is our middle Bollinger Band. Remember, there is no monopoly to what strategy you trade or what you use to determine your trend. The goal is to make money, and whatever strategy pays you, just stick to it. For the sake of simplicity, we use our middle Bollinger Band to determine our trend. And what it implies is that anytime price is below the moving Bollinger Band, we are looking for sell entries. And whenever price is above the middle Bollinger Band, we are looking for a buy entry. And our previous video have established that the lower band attract price, the upper band as well attract price. But the middle Bollinger Band 80% of the time reject price. What that means is that, for instance, we have been in a downtrend because price has been below the middle Bollinger Band, and price put towards it, it was rejected. It pushed towards it again, it was rejected. So you can see how it functions. But when it comes to the lower Bollinger Band, you see how price keep piercing towards it. So this is for H4. We have established that we are now in a downtrend. From this zone, price pull back to this point. Now I want to highlight this particular point with this shaded portion. Now point be highlighted, I will now move to H1. Let's assume price is at the middle Bollinger Band there, and when price is around the middle Bollinger Band, two things will happen. Either price will break through it or price will be rejected. Mind you, whenever price just break the middle Bollinger Band, it is not enough to conclude that it's an uptrend. Price need to pull back to it, retest it. It is the ability of having rejection to the upside that validates the uptrend. Otherwise, this middle Bollinger Band is being treated as a zone. So you don't just conclude like this scenario, because price close above it is not enough. Price pullback, it should be rejected with a bullish engulfing or a pin bar to validate that particular confirmation that we are in a downtrend. For instance, look at what happened here. Price came all the way here and price came to this downside. And look at what happened here. Price break through it, price went back, and it was rejected with this bearish hammer with this follow-up candle, and you can see how it continued. Look at it, and then price continued to the downside. From that moment, price begin to respect our moving average. So now let's go back to this point. Now let's look for this particular zone on our H1 time frame. So now one most critical thing I want you to know now is this. I have said it before now that upper Bollinger Band help us to determine exhaustion point and the lower Bollinger Band. Now on our H4 in a downtrend. So even if you come to H1 and price is above the middle Bollinger Band, we are still in a downtrend. So for that reason, if price pull to our upper Bollinger Band, since we are in a downtrend on H4, any price that pull to our upper Bollinger Band is telling us that this is the end of retracement. It's telling us that price is at a point of exhaustion, which means we have come to the end of this pullback. We can now begin to look for opportunity to sell for a continuation of price, for that sell to continue. And if you look at it critically, you can see this, that when this price came to this zone, to this middle Bollinger Band, if you look at it on your H1, you will see that price is already at the upper Bollinger Band. You can see it now. Price is at the middle Bollinger Band on H4. If you come to your H1, price will be at the upper Bollinger Band. They know that this is an exhaustion point for the pullback. So from this point now, you can now begin to look for your entry trigger. What is your entry trigger? At this point, you now pay attention to your indicator window. Where is your commodity channel index at this particular time? So if we look at it critically, if we marked our commodity channel index, I want to highlight it, and so now we have our commodity channel index marked out. So let's go to H4 again and see where. So you can see that even our commodity channel index is at the level of 80 and 90. Price is at the middle Bollinger Band. Now we'll move to our H1. Now coming to our H1, price is at our upper Bollinger Band. And then our commodity channel index is at the level of 80 and 90 of the RSI. So this becomes a double validation. And then look at this. Here now we have a typical divergence. Price is making a lower high here, and here we are having a higher high. So this gives us a valid confirmation that have come to the end of our pullback. So you can put your trend line this way, and then immediately price break this trend line, price close below this moving average, you make your entry, your stop loss is at this high. That is what validates your upper Bollinger Band as an exhaustion point. Pull back to it becomes a valid exhaustion point in accordance with your commodity channel index. Otherwise, the fact that price is just at the upper Bollinger Band, if it is against the trend, it is not an exhaustion point. It means that you are trying to look for a reversal because it's against the trend. But this one is in favor of the trend. So this is the end of a pullback. In that aspect of a reversal, in the subsequent video, I'll be sharing with you what you need to see. If you spot this here, if you go to 15 minutes, you will spot the same thing. You can see it, beautiful. The same thing, upper Bollinger Band on 15 minutes. Here it is. And then you see your trend line, price break out of it, close below the moving averages, and then you are on your way to the downside. This is simple. You can see this, and then you can see this. So this is how perfect it works. You can see this alignment. So this shows us that this is an exhaustion point. That is the highest level of pullback, okay, which you can take advantage of at any point in time. Now we are in a H4 again, and now price is beginning to pull back. So what are we expecting to see? This price will pull back. It must not reach the middle Bollinger Band. It can pull back here and choose to continue to the downside. But for us to know that this is the exhaustion point in this scenario, if this price did not get to middle Bollinger Band here, if it is able to get to middle Bollinger Band here on our H1, it means that price should be on an upper Bollinger Band. But if in this scenario it did not get to the middle Bollinger Band, maybe it pulled back to somewhere here and it reversed, it means that on our H1 price should be at the middle Bollinger Band. Just as it's pulling back now, let's look at our H1. Good. Do you see it? So now this price, it will pull to middle Bollinger Band, and then probably it will now begin to sell, and then by then this one is already at this zone, and they will begin to look for a candlestick formation that we will sell. Remember, in that scenario, H4 have not gotten to, but when H4 gets to the level of our middle Bollinger Band, it means on this H1 we are going to have our exhaustion point at our upper Bollinger Band. So this is how simple and how explicit this thing can be. Okay, so if we trace it to our 15 minutes now, you will see that we are already at our upper Bollinger Band. So this is how it works, and I believe this is an enlightenment for you. Go through this video again so you acquaint yourself with this explanation. The subsequent video, I'll be sharing with you how you can take a reversal. This is applicable to currency pair, GBP USD, Euro USD, Euro JPY, anything that has candle, Bitcoin. This is applicable to it. I'm using Boom 500 as a case study. I believe you have learned something new. Do not forget to give this video a like, subscribe, turn on your notification bell so you'll be the first to get notified when we publish our next video. Thank you for watching, thank you for supporting the channel, and see you in the subsequent video.